This is Matt Russell, and welcome to the DailyFX Forum.
So welcome to the DailyFX Forum Highlights video for 1 a.m. on November 4th. Just going to dive right in to the forums right now. And one of the things that caught my eye was a post by Richard Crevo here, pound volatility on October's NFP announcement. And it's good that Rich is going back and seeing how the market reacted back then in individual pairs. He did this in a few different areas within the forum. So looking at this chart here, and actually this is something that we teach in the day trading course at the DailyFX course, is basically to look one of the news strategies. And again, news trading is incredibly difficult, but one of the things that we do teach is looking for that very large spike to the downside or to the upside, if you will, and then trying to enter after that point. Now, the logic behind that trade idea, if you think about it, what does a long wick mean? It means that prices came down to a certain price point, and during this red candle, at one point, this was one large, ugly red candle, okay? But within those 5 minutes, prices then rebounded sharply to close back up there. So that means that you can infer that there is support at this level down here. So as prices kind of meander a little bit, a good trade might be to go long with a stop beneath that low spike right there. Of course, anything can happen. Of course, the market can quickly reverse. And I actually want to show you an example where personally I would have lost money on a similar trade idea, and that would be the dollar yen. And again, Rich is going throughout the forum here, posting a few different charts and how the market reacted after the NFP during last month. But anyway, so here's a long spike to the downside, and prices sort of meander here after closing back up here, leaving behind that long wick. And I personally might have entered, let's say at this area right here, and then be stopped out as prices do take out the low of this wick right here. Now the benefit using a long wick like this is that I would not personally I would not let the market penetrate this by even a few pips. If it does, I'm out of the trade. But again, I wanted to show one winning example and one losing example, because the most important thing you can learn is how to lose effectively. Now I also wanted to go now to the scalping thread, and we can scroll through some spam here from Matt Russell and get to an interesting point here. And it's something that I want to hammer home certainly this week. There's a lot of news, and here's a post by John Rivera replying to Dollar CAD Pure Player, who's asking about news strategies. Are there any specific news strategies that he can use? And as John states, trading news releases is always a tricky situation, since the market's reaction to a given event will be different each time. And as I always like to say, the market's a discounting mechanism. It's not a voting machine. And the logic that that all these traders are sitting on the sideline waiting for some sort of positive or negative news, and then once that news is released, everybody jumps in one side and the market should go in an expected direction. That's not reality. Reality is the market is a living, breathing thing. You got a bunch of different things going, banging in against each other, moving this way, moving that way. It's just the forces of supply and demand. And then Tom writes back here, excellent point. We always tell traders in our daily FX courses that predicting economic numbers is one thing, but predicting the market's reaction to another. Again, it's very important to know if something's been priced in, to watch the market reaction, or to watch what happens before the number is released. And that should always go into your analysis, and you should not expect next day service if a certain number is a certain way and the market should move in a certain direction. It certainly doesn't have to, and in my experience, it rarely does. It usually moves in the opposite direction. That's why personally I just want to know what time the news event is, and then I'll just look at the charts and trade it off the charts. I'm not trying to infer what this means longer term, if we're finally turning the corner, or if Mickey Mouse is it's his birthday. It's all the same to me. It really doesn't matter in terms of trying to guess what the news means. And the problem is that in hindsight, you can always, explain the price action in terms of news. So traders felt one way, and then, prices reversed, and then all of a sudden they felt the other way. It really has nothing to do with that. It's just, again, it's a function of supply and demand. And then if prices, let's say, they begin to fall, it really has nothing to do with all these traders in collusion deciding, calling each other, hey, this number actually, means this instead of this. It's just a matter of supply demand. All of a sudden, enough sellers come in, and you know, they whack the price down. And you know, at the end of the day, it's as simple as that. Again, my name is Matt Russell. Thank you for listening.